Hi and welcome back to 𝗕𝗘𝗪𝗏𝗀𝗀. In today's video, guys, we're diving down into the world of 𝗕𝗘𝗪, specifically to talk about the price action. As we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at 𝗕𝗘𝗪𝗏𝗀𝗀. Right, with all that said, done out of the way, let's dive down into the charts and take a look at what's going on here with 𝗕𝗘𝗪. So we're going to start things off with the weekly chart, guys. We are paired up with USDT. We are using Binance as the data source, so you feel free to replicate this as you will. So the first thing we're going to do is just analyze this weekly chart. Okay, we can obviously see there's a good kind of traction to the upside with this data, so we can obviously see that everything was nice and low basically March of 2020. This is pretty much where the bull run really started for many altcoins in this space. Effectively peaking out up here in August, again in line with many others, coming down here in November, and then spiking up again, March, April time for 𝗕𝗘𝗪𝗏𝗀𝗀, and then a pullback. This pullback here was quite a significant one, taking us down into the lows of July before spiking back up again. Okay, now what's really interesting about this is we are not following those 5 impulsive moves. It's the same kind of structure, but it's not impulsive. And the reason for this is if we actually take our impulsive waves, we can actually go ahead and just plot this out for you where they should be. And then I'll show you why this is not what we're actually seeing. Okay, so as you can see with this yellow line across here at 9.9 cent, this is the top of our basically our candle here on week commencing the 31st of August. It came in at 9.8 cent. Okay, so basically this here is our basically our level that we want to be monitoring, right? 9.8, if I actually pull that down, right? And what we actually see is wave 4 should never cross wave 1. And what you actually see here is wave 4 dropping below wave 1. That basically invalidates the entirety of these impulsive moves. So we actually have to delete that. So we know it's not impulsive, right? So we know that it's not an impulsive move to the upside that we're witnessing here with 𝗕𝗘𝗪𝗏𝗀𝗀𝗃. It's a very similar structure, but it has been invalidated, and therefore we cannot use that to analyze where things are going. So instead, what we're going to do is we're going to be paying attention to these trends, right? Because we've got some pretty clear trends going on here. We have trend 1, trend 2, trend 3, trend 4, and we're looking for a trend 5. Although it's not an impulsive move, it's still trending. Okay, so what we're doing basically is trending with the entire bull run, right? That's the trend, it's moving up. But what we're going to do is we're going to take a trend-based Fibonacci extension, okay? And this is going to help us plot out where things are going to go next, okay? So what we're going to do is we're going to take the low of what would have been the wave 2 area, just down here, basically the lows of 2020, the later part, so November time. We're then going to take this up to where we were spiking up in March, okay? We're going to grab hold of that high, and then we're going to go down and take our lows of July, okay? And that's going to be plotting out the fib for us, okay? So now this is a trend-based fib rather than just a high and a low fib. We're using 3 anchor points. This actually allows us to be a little bit more accurate with where those extensions are likely to go, right? When we're trying to predict out how high things are going to go, then the trend base is going to be a little bit more accurate, specifically when we have 3 decent trends, right? Trend down for wave 2, trend up for wave 3, and a trend down for wave 4, right? These 3 trends help us actually indicate where the next leg to the upside is likely to go, okay? It's a little bit more accurate than just a standard fib. But we will get into the standard Fibonacci's to be more conservative in a moment. So I'm just going to make sure that we plot this on so we get right onto the nail on all of those, right? So basically here we can see that we obviously pulled back. We've had those nice low areas of, what is that? 8.9 cent. And then obviously started to rally up nicely right now. Obviously trading at 57.3 cent right now. And we are up against resistance, the previous high, okay? So we're basically up against it. Now we did actually wick higher to 66, just higher than 66. In fact, we got to 68 cent, okay? So we obviously wicked nicely up there and we pulled back. And again, this is actually looking pretty good. And again, we can also see, from a potential cup and handle in here as well. It's easier to see this on our weekly chart. If I actually go ahead and grab hold of our arc here, what we can do is we can see that there's a really nice, neat cup and handle right here. Let me just grab hold of that. So you have your cup, and then over here you have your handle, and you can pull that down, right? So we have a nice, neat cup and handle on the weekly. And then obviously this actually should show us an interesting area to kind of peek out too. So if we grab that and pull that down, it shows us moving out to 74. Now we fell short of that, right? But we did obviously spike up to 68 cent. So again, just short of that target, and then we started to pull back down again. So again, that's not too bad. I think that's kind of expected, obviously, with the rest of the market also pulling down as well in that kind of time frame. Right now we are pushing back up again, and this push is coming up against resistance. We're going to get into that in a moment on the smaller time frame. Ultimately, the structure here is looking pretty interesting on our weekly chart for 𝗕𝗘𝗪𝗔𝗥𝗑, and I do think that we are likely to see some interesting targets get hit in the very near future. So the 1.618 comes in at $1.01, the 2.618 comes in at $1.59, the 3.618 comes in at $2.17, and the full 4.236 comes in at $2.52. Okay, so this is basically your optimized model. This is the one that's likely to kind of see the peak of the bull run around these numbers. Not really likely to push much higher than this based on the trends that we've currently seen inside the data. Okay, so this kind of gives us, if we want to be, increasing our risk element, this is where you kind of want to be like, okay, that's the top of where things are likely to go with 𝗕𝗘𝗪𝗔𝗥𝗑 in this particular bull run. Now, when we jump down into our daily, we actually have a different Fibonacci, okay? This fib uses the high and the low, okay? So basically just wave 3 and wave 4, or what would have been that correction that when Bitcoin was at 65K down to 28K, right? Take that one correction into consideration. This actually shows us moving out to $2.25, right? So when the weekly is looking at $2.52, the daily is $2.25, right? And this is based on just one trend rather than 3 trends. So this is a more conservative kind of price target, okay? This one basically means that you can get out without worrying about it kind of going right the way to the very top, peaking out. And obviously, greed is going to be your enemy during the bull run. So you want to make sure that, you have good exit strategy and all that kind of good stuff. Make sure that you have some price targets that are more than likely going to actually come in rather than trying to push for something that maybe, isn't going to happen and you'll be left holding the bag during the bear market or potentially selling on the way down. And we don't want to sell on the way down. We want to sell on the way up. Okay, so obviously I'm not a financial advisor. Chris is not a financial advisor, so do your own research and all that kind of good stuff. But for me, this is a nice conservative set of price targets, right? 91 cent, $1.42, $1.93, and $2.25. Okay, so those are the kind of nice set of conservative price targets, and you should be kind of aware of. And if you're happy with that, great. If you want to try to get a bit more, then use the trend-based fib. It's going to be more difficult, but it's going to give you a bit of a flavor as to where to go. Now, on the journey to the downside, we did scope out a bit of a buy zone. This was down here, okay? Obviously, we wicked actually a little bit lower than a buy zone, just a tad for 2 days, okay? But ultimately, this is a fantastic opportunity to build up a position ahead of moving to the upside. So again, this buy zone for us, it came in at 13 cent down to a low, or what we thought would be the low of 9.9 cent. But we came down a little bit lower. Again, no real reason as to why that I could see here. But basically, we came down a little bit lower here, just a couple of wicks. And then we pushed on up for 2 days. So everything's looking pretty good. We had a good traction to the upside. We pulled back for September. We then pushed up, coming just short of the target. We set a new high. And then we pulled back down to the 786, and now we're pushing up against the previous high that we had over this side at 59.9 cent, okay? Looking overbought on our daily stochastic, so we are looking for a correction. Doesn't mean it has to happen anytime soon. Just look at this move here where we're overbought for quite some time. So again, we can be up here for a while, but we'll have to see if the hourly is going to allow us to be up in the overbought zone for quite some time, or whether or not a correction is going to happen anytime soon. But before we go down into the hourly chart, we're going to jump over to the Evidenceio dashboard. If you're unfamiliar, there's a link in the description down below. Evidenceio, they use artificial intelligence and machine learning to help us understand the underlying value of cryptocurrencies. It's completely free to use, so do sign up. You're going to get more information about your cryptocurrencies that you do not generally see from the charts. And I don't think many people are actually covering Evidenceio on YouTube either. So again, you're going to be having that little bit of a competitive edge. So we're going to take a look at 𝗕𝗘𝗪𝗔𝗥𝗑 here on Evidenceio to see what the artificial intelligence is saying about some of the things going on in the background. So overall, we're a B1 rating. That's the same as Harmony, so that's looking pretty good there. It's just below the top tier of A rating cryptocurrencies, so that's a pretty good kind of rating right now. As we come down, we have a Fear and Greed Index. Now, this is not the Bitcoin Fear and Greed Index. This is a Fear and Greed Index that the AI has derived for 𝗕𝗘𝗪𝗔𝗥𝗑 specifically. So it takes a look at everything that's going on with 𝗕𝗘𝗪's data, and it says basically there's actually a reasonable amount of fear in the market for 𝗕𝗘𝗪 right now, a C2 rating. Now, what's interesting about this is when we pair it up with the Sharpe ratio. The Sharpe ratio is an A2 rating, and the Sharpe ratio represents your fear represents your risk reward ratio, right? And right now the rewards outweigh the risks, or this Sharpe ratio is indicating to us, put it another way, that we want exposure to 𝗘𝗘𝗧 right now. So when we have a Sharpe ratio that's actually quite positive and a fear and greed index that's quite negative, that basically is telling me to buy that fear. There's fear up for grabs when it comes to 𝗘𝗘𝗧 ahead of where things are likely to go next. And that's what this artificial intelligence is indicating with these two indicators, right? This is how I'm interpreting that data. I'm not a financial advisor. Do your own research. Signing up to 𝗖𝗢𝗠𝗪 might be a part of that research. They update these ratings every 24 hours, and right now there's fear in the market for 𝗘𝗘𝗧, and the Sharpe ratio is saying that we might want to buy it. So as we come down here, we have an 𝗕𝗕𝗪 ratio. The 𝗕𝗕𝗪 is your liquidity. This is an A2 rating, indicating there's no problems with buying and selling 𝗘𝗘𝗧 right now. Moving averages are an A2, so no problem with a 10, 50, or 100-day moving averages. And of course, we have the profitability, the ROI, at an A1. So overall, everything's looking very, very good from the underlying data, with the exception of the unreasonable amount of fear. So fear is the odd one out, right? So we can take advantage of that fear. And when we come down into the hourly view, you can see exactly what's caused that kind of fear to come in. Obviously, the liquidation events and things that have been going on. Basically, we can see that bags have been dropped on the market. We're coming up against resistance right now, but we are, of course, in the oversold area, right? Right the way down here on our stochastic. So the expectation should be a push to the upside. But obviously, with an unreasonable amount of fear, we need to change that sentiment. We need to see buying volume come in rather than selling volume. Right now, actually, that sentiment isn't looking too bad, with a decrease in volume as we have, of course, pushed up a little bit here. Into this oversold area with a low volume, the volume can now spike up in a really strong way that we saw previously. If we got good volume coming and to buy up that fear right now, that could actually push 𝗘𝗘𝗧 above the 60-cent resistance line and onto new all-time highs. I think that we are really able to do that. If we jump back to our daily view, we can see that we're really close to where the all-time highs are, and actually pushing up and getting above there is something that we could start to see happen. So overall, I'm pretty impressed with the data for 𝗘𝗘𝗧 here. I do anticipate some interesting kind of price discovery on the horizon in the very near future. And we just need to be aware that there is a little bit of fear in the market right now, but that won't last forever. And I do anticipate that volatility will dissipate as we continue the growth to the upside. We'll find FOMO as people start to chase those green candles, as we had previously seen once we bottomed out at the bottom of wave 4 here, and continue that growth to the upside overall. I will leave the video there, guys. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap that bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.